Greetings, and welcome back to the podcast. This episode, we are joined by Mr. Jim Davidson, Director of Topaz Energy, ATB Financial, the Business Council of Alberta, the Creative Destruction Lab, the Economic Futures Council of Junior Achievement, the Fraser Institute, and the Modern Miracle Network. Mr. Davidson co-founded FirstEnergy Capital Corp in 1993 and subsequent to that became the Deputy Chairman of GMP FirstEnergy, which he retired from in 2018. Mr. Davidson holds a Bachelor of Environmental Studies from the University of Waterloo and has earned the Institute of Corporate Directors designation. In 2016, Mr. Davidson was inducted into the Investment Industry Hall of Fame and awarded a Lifetime Achievement Award by the Oil and Gas Council. Mr. Davidson is also a recipient of the Queen Elizabeth Diamond Jubilee Medal by the Governor-General of Canada. Among other things, we discussed an optimistic perspective, 40 years of energy banking, and a few lessons learned. Enjoy. This podcast episode is sponsored by Enverus. Enverus is the world's largest energy-dedicated software-as-a-service company committed to helping customers close the gap between data and value creation. Enverus has been supporting the Canadian energy industry for over 30 years. Visit Enverus.com for more details. This podcast episode is brought to you by Canada Action. Canada Action strongly believes that as long as the world needs oil and natural gas, it should be supplied by Canada, where the economic benefits support our Canadian families and social programs. Canada Action believes it's time to champion our energy sector to help build Canada up and get our national economy back on track. Learn more at canadaaction.ca. This episode is brought to you by Upgrade Labs. Upgrade Labs offers a comprehensive range of cutting-edge performance and recovery services that have been proven to optimize your health in minutes, not hours. Whether it's accelerating muscle mass and bone density or addressing injury and inflammation, start your experience by booking a free cell health analysis at upgradelabs.com/Calgary. This podcast is brought to you by Energy United. Energy United is an organization with a mission to promote practical energy policy across Canada. Energy United is building a community of Canadians that are passionate about Canada's natural gas and oil industry and are willing to take action. Energy United is driving change on issues that matter, all the way from the carbon tax to the emissions cap. Join Energy United to make a difference at energyunited.ca. Good morning, Mr. Jim Davidson. Thank you very much for doing this. I really appreciate your time.
Oh, thank you very much. I'm happy to be here.
We are currently in the Shaunavon room, if I'm correct, which is where FirstEnergy originated, which I just learned is a cool piece of information.
Yeah, that's right. We started to meet, the founders of FirstEnergy started to meet in 1992. We met for a year before we actually opened up the office. We would meet every Tuesday. We would come in separately. We would leave separately to make sure that nobody was aware of what we were planning and forming. So this is part of the history of FirstEnergy in this room, in the Petroleum Club.
Nowadays, you're on the board of Topaz, ATB, you're a philanthropist, you're the co-founder of FirstEnergy. You've done a lot of things, but how would you describe yourself nowadays?
Well, I think I'm an entrepreneur. I'm a philanthropist. I am a Canadian, and I'm a Calgarian by subset to that, and proud of all of it.
This is 3 of the 4 FirstEnergy co-founders now, so I'm counting my lucky stars. I also reached out to you about 2 years ago, so it's a lesson in persistence. So
yes, I'm sorry for that. I don't generally choose to take the opportunity of going back over my history, but your persistence has paid off, and I'm happy to be here.
For the listener, maybe just to start at the beginning, like we mentioned, you were the co-founder of FirstEnergy, but what was FirstEnergy?
FirstEnergy was one of the first investment boutiques that was formed in the vacuum that had been created by the breakdown of the 4 pillars of the financial institutions. Those are the insurance companies, the banking companies, the trust companies, and the securities firms. And in 1987, federally, they changed the regulations to allow mergers between each of the entities. And from that point forward, there was a rash of mergers that took place where the banks bought out the investment firms that had been controlling the securities industry for the previous number of decades. Bank of Montreal bought out Burns Fry and Nesbitt Thompson. CIBC bought out Wood Gundy. RBC bought out Royal Trust first, and then Dominion Securities. Midland Wallwin Stodgel and Midland Doherty merged, and then were eventually taken over by Merrill Lynch. So what transpired by 1993, when FirstEnergy opened up its office, was that a vacuum had been created among the mid-cap and small-cap dealers in Canada. And as a result of that, FirstEnergy stepped into a void with only really one real long-term competitor, and that was Peterson Company.
To go back in time a little bit, originally you're from Toronto and studied at the University of Waterloo?
Yes, I grew up in Toronto, downtown Toronto, went to University of Waterloo, and then continued to move west and came here on a bit of a lark as a summer job as a director of Camp Chief Hector, which many of your listeners would know and relate to, and fell in love with the mountains, fell in love with the people, went back for my last term in Waterloo, and then came out again for the summer, earned a little bit of money. I paid my way through university and ended up writing my GMATs to get accepted into business school. And in the interim was hired into the brokerage industry and ultimately fell in love with that also. My career grew over the years. That was 1981. And I ended up working at Midland Wallwin and then onto First Marathon Securities, which was the last firm I was at before forming FirstEnergy. Oddly enough, because this is full circle, because in 2016, FirstEnergy was ultimately sold to GMP. A couple of my cohorts at First Marathon, Mike Weckerly and Kevin Sullivan, were friends of mine at First Marathon. They ultimately formed GMP Capital.
Small world.
Small world.
Why the investment sector?
A bit of a lark, really. I wanted to be a teacher, and that was what my heart was set on. I decided that I would give the investment industry a try. I was a stockbroker to begin with and fell in love with the business. I started out my career actually diversifying people in Calgary away from the energy sector. Because I was from Toronto, I had a bit of a broader cross-section of knowledge of what was going on and outside of the jurisdiction of Alberta, and ultimately was seduced into falling in love with the energy sector and then built up large stock positions among my clients in some of the early names that your listeners would know and relate to: Poco Petroleum, Cimarron, Renaissance, things of that nature. So got to know individuals that were running these companies at the time and just were fascinated by the entrepreneurial spirit that was inherent in the energy sector and in the province of Alberta.
Did you get a sense there was more opportunity out west rather than staying in Toronto?
Oh, yes. Yeah, there was no doubt in my mind. There was a younger, more aggressive entrepreneurial sense and feel to the province at that time, and still, actually. And that was exciting for a young man.
Fast forward to the fall of 1992. What were you thinking before you made the jump to FirstEnergy? When you were kind of at your prior job, were you just thinking, I hope this works out and it seems like a good idea?
Yeah, I think that I had reached a stage in my career where I was fairly successful. I was still fairly young, and I was open to listening to new opportunities as they presented themselves. I had become friends with Murray Edwards, who had in the back of his mind forming a competitor to Peterson Company, and came and met with me and attracted me to the idea of actually becoming a co-founder. And I had known Rick Rafton because I'd competed against him while I was at First Marathon, while he was at Peterson Co. So I know him reputationally and was impressed with his skill set. Brett, I didn't know at all. I got to meet as we were forming the firm. He had a small little practice, Wilson Mackey, and we've vended that into FirstEnergy to begin with as the property side.
You had to wait a little bit before you quit your previous job. Was that a stressful time, or how did you navigate that period?
Well, yeah. I mean, I was still had a fiduciary responsibility to my clients at First Marathon, and I fulfilled that. But I had in my mind an idea that a new entrant into the boutique space would and could be successful. So we went about forming FirstEnergy, acknowledging that we needed to hire some additional individuals, and we earmarked a number of those individuals, although we had not approached them as of yet, for the various spaces: investment banking, sales, trading, research. And we struck out on our own, only to find out that the energy sector in the TSX was weak and getting weaker. And for the first year was down 25%. So our timing was somewhat off, but I think by and large, it seemed to have worked out.
You all put your own money into the company. Did you feel it was important to have skin in the game and create a symmetry of risk with future shareholders?
Well, yeah, you're right. We put our money up. We were concerned but confident in our skill set. This was a new endeavor, so there's always risk involved. And as a result of that, it caused a number of sleepless nights. But what we found is that the world was ready, that the institutional clients that we approached were ready for a new entrant into the field. And we actually quickly established a name and a presence. And even though the market didn't cooperate in the first year, we actually got a number of financings done and completed in what was very recent, the new bought deal format that was originated by Gordon Capital before our formation.
Right. Do you remember the first time the four partners sat down across from each other, maybe in the office when you first got going in the fall of 93, I think it was?
Well, yeah, Murray actually never worked at FirstEnergy, so he never actually sat in the office. But yeah, I remember the feeling: exhilaration, fear, concern, hope, all of those things that an entrepreneur feels when they launch a new enterprise. And so it was exciting. We were still young men in our early 30s. We were full of bravado and hope and ego. You have to have a lot of that to be an entrepreneur. And we went about setting up the offices in a slightly different style than was historically the case with the brokerage industries at that point in time. We decided very early that we were going to have an open office concept in all departments. And we did that on purpose to try to increase communication amongst the individuals. Obviously, there had to be separation with investment banking, but within the offices on the side of the investment banking area, there were no offices. There was not an office for a CEO or managing director or anything of that nature. You worked with everybody else. And I found that from a managerial practice, this worked out extremely well because you were constantly walking the floors, talking to people, and you were completely integrated into the day-to-day activities of the organization. And that proved to be extremely successful. And at that point in time was entirely unique because the rest of the investment banks were set up in a much more conventional office-only format. Other than the trading pit, they always had a trading pit. But from that standpoint, we were different. We were a little bit younger by demographic. We were a little brasher. We dressed a little bit differently. It wasn't the button-down collar, pinstripe suit aspect. We were a little bit more colorful, I'll say, in terms of style and dress. And we had some unique and different ideas about how we wanted to make our impact in the world and, went about trying to execute on that.
Where was the FirstEnergy offices originally? downtown?
We were in the Bank of Canada building and expanded and grew into the Dome Tower and then evolved into the Intact offices. So we were many places depending upon the size of the enterprise. We went from 4 to, at one point in time, 160 with office in London. And then after a while became a little bit smaller.
Do you remember your first deal at FirstEnergy?
Yeah, our first deal was done in our third day of business. So it was a $10 million financing for North Rock, and completely nerve-wracking if you go out of the gate and you're immediately hit the ground running. We wanted to make an impact, and so we surprised everybody by how quickly we got our first deal done. And we grew after that. We grew in comfort and confidence in our abilities, and we started to attract more highly skilled individuals that were young and entrepreneurial by nature from other brokerage firms and primarily the banks. And we did something a little bit unique at the time too, which was we attracted technical people from the oil and gas industry to become investment bankers and research analysts. So we didn't have people that had just a financial background, MBA, for example, CFA. We had individuals that were petroleum engineers and geologists and landmen that actually had been on the inside and understood the industry particularly well. And we used that to convince our clients that we had better and more thorough insight in terms of what was going to transpire within the oil and gas industry and who were the individuals that should be backed.
It's easy to look back on FirstEnergy nowadays with nostalgia, but were those times stressful doing bought deals and whatnot? Was there stress involved with growing an investment bank?
Yeah, for the benefit of your listeners, a bought deal, which was fairly new at that point in time and now has become the standard practice in the industry. It was developed in the mid-'80s by another boutique firm called Gordon Capital out of Toronto, run by a fellow by the name of Jimmy Conacher. And the practice was that the brokerage firm would buy the deal. In this case, going back to our first transaction, North Rock, which was a $10 million financing, you would buy the $10 million financing, and then you would take the responsibility on to redistribute that out to the institutional shareholders and the retail public. So there is stress because there are capital at risk. And we adopted that financing structure in a material way when the banks were still reticent to do it. And that was our foray into that opened the door for us to become what was then the leading investment bank in the energy space in Canada.
Were any of those more stressful than the others? Do you remember one where you didn't sleep?
Well, I think almost always they're stressful in some way, shape, or form. Did I price it properly? Is the market there? Is something going to happen overnight that is going to derail the financing? Something that you're not aware of, something that might happen overseas, something that you are not in control of. There's many things that could go wrong. But I think we did close to 1,800 financings over the life of the firm. So we learned a few things along the way.
On the flip side, was there one that just seemed to be effortless? That bought deal that sold within hours back in the busiest times?
Well, there was a period of time when the energy sector was so much in vogue that we were in 5 financings in one day. So talk about effortless and stressful at the same time. And we led 2 of the 5. So it was an extremely busy day. It was a very profitable day for us, but everybody was absolutely exhausted by the end of that one.
No vacations.
And no.
Do you remember your first day as CEO of FirstEnergy?
When FirstEnergy actually was formed, there was no president or CEO. There were just managing directors. And so we originally were the 4 managing directors. And then as we evolved, we grew over the years. We had as many as 12 managing directors at any one point in time running the firm. So everything was done by consensus. all of the big decisions were made with everybody in attendance around a boardroom. And so it was a true partnership. There was no titles to begin with, but in actuality, the first title that became necessary to have was when we struck a deal with Société Générale, who ended up investing in FirstEnergy and owned 20%. And at that point in time, myself and John Chambers took titles to establish the fact that we were dealing with a bureaucracy and a European bank that was used to having structure. And as a result of that, we took titles, president and CEO at that point in time. Before that, there wasn't any with the firm. And then I became chairman as a result of that. And that transaction became very significant to FirstEnergy. At the time, it gave us a balance sheet because of the bank's backing, and through a transition into the trust structure that was the predominant corporate structure within the oil and gas industry during that era, it kept us relevant with our clients because we needed a balance sheet to assist us in the process of some of these larger transactions that were hundreds and hundreds of millions of dollars.
You're a little biased. However, what ingredients led you to becoming CEO and chairman?
Well, as I said, the necessity of having a title was wrapped around the Société Générale transaction. Other than that, I was a managing director, and we were all managing directors, and literally we kind of ran it as a partnership. But as time went on, it became logical that I would have taken on those titles in any respect. And going back, Rick, one of the original founders, left in 2000, so after 7 years, and he had an entrepreneurial and still does have an incredible entrepreneurial spirit that made him want to leave and go out on his own. And because your listeners would know the story of W. Brett Wilson, he was diagnosed with an aggressive form of prostate cancer in 2001, so the year after. And from that point forward, he became part-time, as he should have, left to find medical intervention that was going to assist him in the process, which he has, thank heavens, dealt with and survived to this day, which is absolutely fantastic. Yeah. So staff was turning over. We were evolving, and through 30 years, we actually turned the entire team over almost 4 times. And I mention that because succession planning is always an issue with boutiques. If they come up against a problem, Gordon Capital, because I mentioned it earlier, being a prime example, succession planning is difficult to do. And you have to have people within your organization that have the skill set and the desire and the will to evolve and grow within the organization to take on senior titles, which is exactly what we had in the case of the managing directors and John Chambers and Nick Johnson and others that grew into the roles.
This podcast episode is sponsored by Conate Water Solutions. Do you need cost-effective water sourcing options to supply your next drilling or completions program? Conate Water Solutions is a specialized hydrogeology company focused on water well drilling, testing, and water management services in Western Canada and Texas. Contact info@conatewater.com or check out conatewater.com for more details. This episode is sponsored by Contango Commodity Marketing. Are you keen to learn more about the Western Canadian crude oil market? Contango Marketing is hosting a 2-day introductory course that provides comprehensive learning on logistical and commercial practices, practical insights into industry trends, and current market fundamentals. Spots are limited, so register now at contangomarketing.ca. Do you remember when you started to realize FirstEnergy was working and this was actually going really well?
Very early in the formation of FirstEnergy, we caught some tailwinds. As I mentioned earlier to your listeners, first year was in a down market, and we did a number of transactions, so we kind of felt our way through it. But the industry turned, the stock market turned, and after that, we just caught fire, and we did a tremendous number of financings and then A&D transactions from that point forward. So we really felt that we were coming into our own by 1995. So a couple of years into the business, we really felt confident and comfortable with what we were doing.
Some of the past guests on the podcast have referred to you as Jimmy the Bull, in the sense that you're an internal optimist. Do you think that was important to your success in business?
I think being an optimist is very important to any entrepreneur. I think you have to believe that things will ultimately turn out. You have to work extremely hard to put the prospects of a good outcome in your favor, but you have to believe that things are going to work out. And I've always been that individual. And it helps particularly in the oil and gas industry, which has historically been extremely volatile. So in the 30 years of FirstEnergy, we probably went through 5 cycles. And you need to be able to adapt to those. You need to ride the highs with some semblance of understanding that you're lucky to be in the position that you're in. And you need to ride out the lows with the belief that you have the skill set to survive. And if you could do both those things, you'll be successful.
Did you need to inject a dose of realism into your optimistic outlook? Did you have to balance that with being objective, or how did you think about that?
Yeah, I mean, you have to be realistic in terms of understanding where you are in your position in the industry, what you can do, what you're capable of doing. You have to have a little bit of cynicism to understand what the roadblocks might be and where the guardrails are. But you have to have an underlying belief that you're going to be able to come up with the answer that is necessary to take the next step. That comes with experience, and it comes with some devastating losses and problems that crop up that are unforeseen, that you are not able to control. And as long as they don't completely knock you off balance, you have the ability to rebound, get up the next day and do it all over again. I mean, that's really what it was all about. 30 years is a long period of time to actually gut it out every single day. Come to the office, understand that you're going to make a difference, that you need to make a difference. That's entrepreneurialism.
Speaking of tough times, do you remember the Halloween massacre?
Well, yes. The industry was turned on its head because of a decision that was made, oddly enough, by a conservative federal government with Stephen Harper at the helm, who by and large is as an entrepreneur as much as an economist can be. So retooling right after the fact was necessary, and that happened around the financial crisis too. So there was a double whammy during those 2 or 3 years that turned everything on its head.
So what did you do that day? Were you stressed, or were you surprised?
Well, it's a waste if you don't take advantage of a crisis. So what we did was we made the decision that we had a growing audience of investors within Canada from Europe. And although that diminished dramatically during the financial crisis of 2008, we felt that it was time for FirstEnergy to look to expand. And so we, in a counter-cyclical fashion, which was very typical of how we ran our business, I wandered into London and established an office there, and then seconded Hugh Sanderson, who was a bright and upcoming managing director in investment banking, to move there, much to the chagrin of his wife at the time, who ultimately fell in love with London. And we then built out an office in London, and were successful in that endeavor. So there's an example of taking a financial crisis, but a crisis in the business, and pivoting to try to take advantage of it.
At times, banking can be a little stuffy with hierarchies and structures and preset roles and ideas and whatnot. How did you balance that with an entrepreneurial venture like FirstEnergy? Do you think that was key to your success, thinking outside the box?
Yes, I do think that we thought outside of the box a lot. In investment banking, traditionally with the banks, the primary contact to the CEO of the company that you're covering and hope to do business with is within investment banking. The best relationship that could possibly happen with a client from inside of FirstEnergy might be sales, trading, research, or investment bank. We didn't actually try to pigeonhole the relationship into investment banking. If by some chance the relationship strength was held in another department, we were very comfortable that that was proper and prudent, and we utilized that to our advantage. So you could add a plurality to your relationships that strengthened, that hardened the relationship with the client because it was on a multi-level basis and cross-jurisdictional from a departmental standpoint.
Well, that's a lot of FirstEnergy questions. Maybe fast forward to today and some current events and whatnot, if that's okay.
Yeah. Well, I evolved out of FirstEnergy when we sold it and joined the board of ATB, which I am very happy to be on the board of. It's an excellent bank and great governance, great CEO, great chair. I've learned a lot through that experience. I'm happy to serve on behalf of the province. So that has been probably my largest time sink, but willingly and lovingly so. I was asked by Mike Rose, who was an early contact of mine at FirstEnergy, one of the first financings that we had done, to join the board of Topaz, which I've done, and it's an extremely well-run company. And I've got to watch a young entrepreneur, Marty Staples, grow into a absolutely exceptional CEO. So mentoring and being involved with the development of individuals was an aspect of being a leader at FirstEnergy that I enjoyed and I continue to do. And so when I mentioned earlier in the interview that I originally wanted to be a teacher, I got to do a little bit of that throughout my role on a day-to-day basis and quite enjoyed it.
I guess to get it from the top, why is Topaz doing so well aside from excellent management with Mike Rose and Marty Staples?
Well, yeah, I think Mike Rose is chair, and having Mike Rose, who is literally the Wayne Gretzky of the energy sector, as your chair is exceptional, and chair and mentor is a great advantage. Structure, they organized Topaz in a slightly different structure. Again, if you're, not making an analogy to FirstEnergy, but we organized ourselves in a slightly different fashion to try to take advantage of the opportunities that were there. Topaz has done very much the same thing. It's in infrastructure and it also is in royalty and is doing extremely well. In fact, I think today has just hit a new all-time high. So congratulations to Marty and his team. So being involved with that board, which is very professional and very well educated and understands the industry, the nuances of the industry very well, has been a pleasure. And then I'm on the board of a private home building company called Olliston at Home, which is new and growing. And then a startup company called Tua Technologies. And I'm on the board of the Fraser Institute. So I'm still busy. I transitioned. Well, I say I'm retired, but my wife says I don't know how many retired individuals leave at 7:30 in the morning and don't come home until 5 o'clock in the afternoon. And it's not because you're working on your golf game, heavens knows.
Also doing obscure podcasts like this.
Yeah.
From your perspective, why has energy banking slowed down in Calgary, Canada?
Well, energy banking has slowed down for a number of different reasons, one of which is that the companies themselves have reorganized and retooled and through necessity are living within their means now to the point where they're profitable and paying out dividends and buying back stock. So in an environment like that, raising equity capital is not necessary. There is some work that is being done in the M&A space because there's a consolidation that is happening within the sector as assets are purchased by the incumbents and the sector starts to narrow itself again. And I'll make an analogy to the formation of FirstEnergy. I talk specifically about the regulatory underpinnings that allowed the vacuum to take place, that allowed the entry of FirstEnergy into that space. But the other thing that was going on also was a consolidation of assets at the top. So the large international firms have bought up so much of the property in Western Canada, producing assets and property within Western Canada, that they felt the need from a profitability standpoint to jettison some of those assets. And those assets would then became available to the new startups like Mike Rose and his team, Grant Fagerheim, Keith McPhail, Al Markin, Clayton Woitas, Ron Green, and Murray Edwards. These are very famous names. Those assets became available for purchase by these entities, and those entities needed capital. And investment boutiques like FirstEnergy provided that capital. So it was the right opportunity with the right expertise and the right timing. The combination of all of those aspects kickstarted FirstEnergy and being profitable from day one.
That, I guess, cycle has since slowed down nowadays, which is why banking has slowed in Canada and Calgary, and the industry has just evolved and changed, more or less. Long story short.
Yeah. So if I wanted to be provocative, I'd mention to your listeners that if the banking industry, which by and large it's done, is moving away from the energy sector, ESG reasons or otherwise greenwashing or lack of profitability. And if the consolidation that I mentioned earlier is continuing, which it is, which means that a lot of these assets are going to end up in the hands of the larger entities in Western Canada, is there a possibility of new companies being formed to take advantage of the assets that ultimately will be jettisoned from the consolidated? So you can see where a cycle could be created yet again.
History repeats itself.
Yeah.
You've worked in Alberta quite some time and seen the economy go up and down, and overall the Alberta economy is pretty strong right now. So I guess why? Why is Alberta so strong, even though the energy sector is changing?
The energy sector went through a 6-year bear market from about 2014 to 2020. And energy prices fell into a point where they were actually negative. Oil was actually negative on one particular day at one particular point in that day. And those prices have now rebounded. And although gas prices are currently weak, I think if you're to look out to 25 and 26, they look like they're rebounding pretty spectacularly. Oil prices have risen, and these companies have learned to live within their means, so they're profitable, so they generate tax revenue for the province. They're at a situation where they're no longer laying people off, which happened from 2014 to 2020. They're in fact hiring again. So that helps the province. And we have an immigration into the province, both from outside the country and within the country, primarily Ontario and BC, because of a better tax structure, lower housing prices. So those individuals will generate tax revenue for the province. So the province is actually doing particularly well right at the moment. I think the UCP government has assisted that process. And certainly Danielle Smith and her leadership is hoping to build on that. But the reversal in energy pricing and the rebound that took place in 2020 are really the reasons for it. Because even though we're trying to diversify this province, still the largest tax revenue generator is the energy sector.
What is the Alberta advantage? And do you think it still exists?
Yes, I think the Alberta advantage still exists. I think that's the reason why we're having net positive immigration into the province. I think we attract a younger demographic, which shows in Canada-wide statistics. I think people come here to build a career, to start a family, and there's still an entrepreneurialism feel to the city and to the province as a whole. Many people are fearful that it's going to go away or has gone away, but I don't see it. I still see a lot of very promising young companies being formed, and in particular in the high-tech space. we're becoming a high-tech hub in this city in particular, but in this province overall. Immigration of highly educated young entrepreneurs, that's a recipe for success.
Right. Seems like the economy may be broadening a little bit, although it's still energy mainly. There's other areas that are helping the province.
The high-tech sector, as I just mentioned, is helping the province, but these companies are growing and are not yet profitable, making a general statement. So they're not helping with the tax base as of yet, but they will. And there's going to be one or two unicorns that are going to be created, and they're going to be Alberta-based.
You're literally a capital provider, both as the CEO of FirstEnergy and nowadays on your own. Why is raising the capital gains tax a bad idea?
Anything that diminishes an individual's desire to invest, because there's risks in investing, is ultimately negative to productivity in Canada. And you can't have a tax structure so dramatically different than your largest trading partner, being the U.S., because capital will flow out of the country. Even Alberta Advantage can't overcome that. You have to have a competitive environment, cost-conscious, cost-of-living cautious, and anything that you do from a taxation structure that diminishes that ability to compete will hurt, ultimately.
So what would you do instead? What's the solution to that? Keeping taxes low and just simplifying things?
Simplifying the tax structure would be one. Keeping taxes low would be two. Being more cost conscious in how you're spending people's money would be three. I mean, for your listeners that are in Calgary, we're going through a green line disaster right at the moment from a funding perspective, because I mentioned Murray's name earlier as a founder of FirstEnergy. The restructuring of the Saddle Dome financing was ill-advised at a minimum and will cost the citizens of Calgary quite a bit more. So stop spending money on, we have infrastructure issues within the city of Calgary that need to be dealt with. Obviously, with the recent problems with water, we probably should have taken more care of our infrastructure instead of building bike lanes or doing something of that nature. So it's how you spend the money and trying to spend less money.
What does a strong Alberta economy look like to you?
A strong Alberta economy looks to me basically like what we have right at the moment. We have an economy that is in the midst of diversifying itself. We have net immigration coming into the province. We have a political system now on the Alberta front that is not a hindrance to business, a young demographic. It's clean. It attracts people that are interested in the outdoors. It is multicultural. I think the province looks as it should, looks to me like it should be right at the moment. It's great. I'm very optimistic.
You're also a philanthropist. You've supported a lot of causes through the years. Humane Society. I mean, there's probably a long list, but what are you working on nowadays?
Well, I'm still a supporter of the Edge School, which I think is a fabulous institution, attracting some of the best athletes from across Western Canada. So that is something I'm still involved in. I donate a certain percentage of my net worth on a annual basis to a number of entities. One, Challener's Children's Society, that builds schools in Africa. So that's probably the furthest afield, which my wife is a significant contributor to, and actually run by Susan Johns, who was an ex-client of FirstEnergy's and grew into being a friend. So that's probably the furthest afield. Red Cross, United Way. I've kind of diversified my philanthropic aspects into a lot of different areas.
Maybe on a lighter note, favorite time in your career thus far?
I think because of the impact that FirstEnergy had on the investment banking arena and on the city of Calgary, that it probably would behoove me to say that. And then the first decade, because we were young and hardworking, That was enjoyable. I think there's a mixture of being in the moment in really highly emotionally charged environment that you end up missing as you move on. But of course, at 67, I'd find that exhausting right at the moment. So I'm happy to look upon it in the rearview mirror.
Was there any books or people that impacted your career professionally?
Yeah, there's numerous books that I've taken bits and pieces from. Zen and the Art of Motorcycle Maintenance would be one. Shogun would be another for completely different reasons. And individuals, I've met so many individuals along my business path that it'd be too many to describe. Some were mentors, some were compatriots, some were individuals that shocked me with their knowledge at such young ages. One of the great things about investment banks is that generally it's a young person's environment. And I will say something about a lot of the female members of the FirstEnergy team were incredibly insightful and thoughtful and so smart that I learned a lot from them. And I'll say one thing, just when we talked about earlier about the fact that we organized ourselves in a different manner, I should say that we embraced women into the organization. At one point in time, very early in the 1990s, so it's a long time ago, we had an entirely female trading department. That was unheard of. We hired the first female salesperson. We had two female CFOs, branch managers in almost every department in every area, investment bankers, research analysts. We always had a component of the organization that was female, and they were so smart and so great. So that was a differentiator also in terms of a structural standpoint. And it impacted and heightened our culture and made more professional our culture. So extremely important, extremely proud of that point, although I didn't view it at the time as being anything other than hiring the brightest person for this particular role, who just happened to be a female. Right. And so looking upon it after the fact, I think that was and continued to be a defining moment in the success of FirstEnergy.
Female EQ is generally higher.
Yeah.
Although you are busy nowadays, involved in a lot of things, do you miss being CEO of FirstEnergy, the captain of the ship?
I think the answer would have to be somewhat, but I didn't seek the role. As I've mentioned to you, from a structural standpoint, we had managing directors, and I was happy to be just one of the managing directors and work on it as a team. I consider myself to be a team player. So I miss the interaction with the team. I miss the problem solving, and I miss the interaction with clients. And often these clients became extremely good friends of mine, and I'm blessed for having known them. And we talk about individuals that impacted my career, then just take a look at the clients that we've had over the years. Al Markin, when I was a young individual, was extremely important to me. He gave of his time to have a naive Toronto-based stockbroker with no knowledge of the energy sector literally come to his office once a week, and he'd get out his chalk and draw and teach me all about geology. And then I would go out and I would take a geology degree, or geology courses, I should say, and engineering courses to kind of round out my knowledge of the energy sector, so I could speak somewhat, only somewhat, but somewhat on the same level to the individuals that we were attempting to do business with, so that I understood a little bit about their business. So,
did you realize Al Markin was above average at the time?
Oh yeah. I mean, you don't meet Al Markin for more than 5 minutes before you understand that he's above average. He was the CEO at the time of Poco Petroleum, and then Poco Petroleum spun out 4 or 5 companies that were successful from senior individuals that worked under him.
Maybe to come towards the end, what advice would you give to a young person in business or entrepreneurship in general?
the same commentary I'd give on the Jimmy the Bull statement. You've got to be optimistic. You have to work extremely hard. You have to be the hardest worker of anybody around you. And you have to have a healthy sense of cynicism, but you also have to believe that at the end of the day, you're going to be the one that comes up with the answer to the question of where do we go from here, or what do we need to do, or what is the problem that we're dealing with. And consistency. I think if there was one thing that I could pride myself on, it might be consistency, because it certainly wasn't intelligence. It was a funny little anecdotal comment. Brett and I were talking one day, several years after the formation of FirstEnergy, came to my desk and I had a pile of resumes on it. And I started to go through the resumes. And it just so happened that Brett came up to my desk at that point in time. And I said, Brett, there's no way in hell that I would have ever hired either of us into this organization, seeing now what the resumes are on my table. And we both laughed.
Well, maybe that's a good place to leave it. There's hope for those out there without the perfect resume.
Yeah.
So thank you very much for your time.
You're welcome.
I really appreciate it.
My pleasure.
Hello, listeners out there. Thanks for checking out the podcast. Hopefully the episode provided some insights. If you enjoyed the show, check out trose.ca where more episodes are yet to come. You can also subscribe to the podcast where your token of support is much appreciated. Until next time, happy coffee drinking.